In the last 24 hours, Bitcoin has made some solid progress towards the upside. However, there are still some big barriers standing between Bitcoin creating that macro reversal and where it is sitting now. The risk of a continuation downwards is still on the table, but it is looking more and more unlikely. Let's go ahead and dive into the charts. Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into today's video. We're going to go ahead and take a look at Bitcoin today and talk about the price action on the small time frame, discussing points of rejection, confirmation, and reversals. The question really is, how high can Bitcoin go if we start clearing these upper resistances, and could we see rejections from this point that could lead to the price breaking back down? Those are the two focuses of today's video. Now, before we get into it, guys, smash the like button, hit the comment button, subscribe if you're new to the channel. We do daily analysis and technical analysis for Bitcoin on this channel every single day. And obviously, if you're new to the channel as well, click the second link down below to get access to our Telegram channel. You get all of our updates, information, videos, whole range of more stuff over here, exclusive charts to keep you in the loop of everything that's going on. And if you're interested in joining our trading channel, you get access to our VIP channel here. We post specific trade signals, as you can see, for Bitcoin, for altcoins. As you can see, entries, targets are all specified over here. Let's go ahead and dive into it. We'll start with our market data. So negative 18.61% for the month. We have seen a little bit of a rally in the last couple of days. Of course, Bitcoin has moved up around 7% since that low that we formed at around 15-ish thousand. As you can see, for the week, we're up about 2.45%. And obviously for the quarter, we're coming back up. We're down negative 14, but we were down negative 21 a couple of days ago. We have seen a pretty strong bounce of around 5 or 6% from that lower level, which was that lower support zone between 15,500 to 15,800. Overall, volatility is around 4.11. Of course, as we start getting closer to these resistance points, as you can see in the chart, as we start getting closer to these rejection points, and it takes longer to create these moves, volatility is going to start dropping off. So we can expect volatility to start dropping off again over here until we make either that next directional move upwards, or we fake out over here, get rejected, and head back down. But we'll discuss that in the video today, of course. And finally, guys, volume is not looking amazing. Obviously, as we can see with liquidations, when liquidations are starting to drop down, we know volatility is dropping down, we know price action starts to slow down, we know overall volume is also dropping down. They all go hand in hand. They all kind of can infer what the rest is doing. So the rest of the market's looking very interesting. We are seeing the DXY absolutely plummet. And we talked about this already. We said if we are unable to find support, this is what we said yesterday, and bounce back above 107, we are going to see a drop down to 106. Obviously, 106 was that major support level we were discussing over here. And we, obviously, if 106 is lost, the next target is 103.78. So it looks like we are on direction for that. Now, there is a chance we find lower support around these levels down over here. It is quite unlikely. It is possible, but the next major support is sitting down at around 103. So as the DXY falls, we generally see the markets rise. As the DXY rises, we generally see the market fall, but it's likely to assume the DXY could continue to fall here until the FOMC meeting, I think in about 20 days from now, where they do the interest rate hike, and that could kind of flip it again for the short term. Total cryptocurrency market cap of gain following Bitcoin over here, they go hand in hand. It did bounce from that major support zone where Bitcoin bounced at 15,500. Again, we do have a lot of resistance above us before we start making any kind of significant moves to the upside. We have seen some degree of a breakout of this descending trend line we had over here, again looking decent. But for us to look macro bullish, we're going to need to reclaim this horizontal resistance level. As you can see, this horizontal resistance level provided that base of support for the entire market between June and November, so quite a fair bit of time, 5 months. And of course, we do need a break above this declining or descending resistance, whatever you want to call it, again for us to flip macro bullish. Okay, Dow Jones is looking good. We did get that second daily close above the 34,000 resistance. It is looking like it's on track to continue upwards, provided that the DXY continues down. We should see 35,000 for that. Obviously, rejecting above this level like we have seen before could result in a continuation down to these horizontal levels, potentially even lower. Again, quite unlikely. It is looking pretty decent over here. There's a good chance we do see that continuation for the Dow Jones. Same goes for the S&P 500. We are above that 4,000 psychological, that horizontal resistance there. We are pushing upwards. The next resistance will be this downward declining resistance over here, which basically marks the upper resistance level of the bear market. meaning that if we do push above there, we have broken out of the bear market downtrend. Okay, this pattern here, this descending expanding wedge, is the bear market pattern. It's a downward consolidation, a macro downward consolidation pattern. This is the bear market. If we break above this descending trend line, we have technically broken out of the bear market trend. We are able to form a new trend. As we already know, guys, these markets are leading for other markets. They kind of are correlated to cryptocurrency. So we've started to see the S&P 500 do well. We'll obviously start to see Bitcoin do well as well. There's a 0.7 degree of correlation between these markets. They generally move, not always, they generally move in the same direction unless there are news specific events that occur within and isolated to those markets that alter the price, such as the FTX crash that altered Bitcoin's price, and I would say was one of the contributing factors to why we saw a negative 26% move down in like 2 days. The charts were bearish. Of course, we did have a ascending triangle formation, but for it to happen in 2 days, it was largely contributed to the FTX, bringing that much amount of selling pressure, all that volume into market, shoving it down. But nevertheless, guys, something to keep in mind on. Obviously, bond yields are leading. As we said yesterday, we started to see the 10-year government bonds move to the downside, and that was leading for the DXY to fall. And of course, we started to see the 2 years come down now too. So again, the overall markets from objective standpoint, looking at the other markets, looking at the data, they are looking like they're trying to push upwards. They're looking healthier. We're seeing yields drop. We're seeing DXY drop. We're seeing the traditional start to rally. It is looking like the macro environment for these financial markets, according to the data, not according to anything else, according to the structural chart data and the technical data, they are looking healthier and healthier, okay? Let's take a look at Bitcoin, however. This is what we're here for. So in the short term, like I said, we had this rally up through these resistance levels, and these red levels over here are our next resistance levels. So as we can see on the chart, the next major resistance level is this level over here. This level has been retested a lot of times, guys, numerous times in the past, you know, in the past 20 days or so, 10 days, 20 days, the 16,800 to 16,830 level is actually that next major trigger, meaning if we're able to push above that, the next target is looking at 17,000 to 17,300. We'll come back and talk about it in a second. But for now, this is currently resistance. So we have made this long extension towards the upside. We are reaching resistance, and right now you should not be looking for longs, okay? For Bitcoin, right now, the next time to be looking for longs, if the price can get over, consolidate, and find support above 16,800. Until then, we are more in favor of shorts. The risk return for this structure is pointing towards shorts for a more favorable trade. It doesn't mean they're going to work out. It means according to the risk return ratios, shorts are going to be more favorable. Resistance is resistance until it's not. We've got a very small distance between the resistance in comparison to that next support and lower support, okay? And if you go ahead and flip the chart, which we'll do now, you can see and check your bias, okay? If you flip the chart, you can see this level has provided massive support. Why would you take a short here, okay, expecting the price to go down until that level is proven that that support level has been lost, okay? So just as you would do anything when you're trading, you are looking to purchase on supports and sell on resistances. And if you go ahead and flip it, it changes the view over here. You're looking to sell on resistances and purchase on above support. So right now, the risk return for a downward move is more favorable. I'm going to say this though, however, that doesn't mean the price can't move upwards. We have to keep that in mind, okay? It doesn't mean the price can't move upwards. If we do push upwards through here, like I said, the next target, $17,300, okay? The reason being, this constitutes that low point over here, which we initially broke down into, as you can see over here, that initial wick down before we bounced strong, came back, found support along here temporarily, and eventually crashed below. So we do know 17,300 or close to it is that next support level for Bitcoin again, but we do have a lot of ground to make up before we get up to there. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. If we do push through 17,300, we come up on the most important resistance level for the current range. The reason why this is the most important resistance level for the current range is with 18,165 actually lines up with the major resistance. I'm gonna go ahead and find it over here. Here it is, which lines up with the major resistance of this level. We'll go ahead and draw it in over here. 8,165 is that lower resistance right over here, constituting the breakdown point, the support points along this distance over here, and we had short-term support over here as well, okay? So that basically that lower horizontal support level of this descending triangle formation that we had, so there's a horrible line over here, that descending triangle formation we had, that lower horizontal support. So 18,165 will be that next major resistance. And with that, it does actually come to the same price point as where that resistance is on the total cryptocurrency market cap. If Bitcoin had to reach 18,165, the total cryptocurrency market cap will be retesting this range. So that means the entire market will be at major structural resistance at this point. Okay, this is a short-term resistance for Bitcoin. This is a short-term resistance range for Bitcoin. But this is a market-wide structural resistance for the entire cryptocurrency market. Okay, so that is that key and major ejection point. If the price can push back above there, we will see a strong continuation upward. Okay, and we talked about in yesterday's video. We're not going to talk about too much today. We're not doing the macro, but we will see that continue upwards. And you can go watch yesterday's video if you want a in-depth analysis of what we expect of the upside if that actually does come to fruition. So to the downside, guys, obviously we do reject over here. We are at resistance. We are rejecting. We can see a continuation back down through here. The next support range, of course, is 16,300. Again, losing a level will most likely, or definitely, should I say, bring us back down here. We've said already, guys, if we do actually end up retesting this lower game, we will not find support. If we retest this level will fail to hold as support. We will continue towards the downside. The next target for the downside is $13,900. According to the market structure over here, if we go ahead and bring up the VRPV, we can see on the larger time frame that 13,900 is that next point of major support on the VRPV. We do have a bit of a dip occurring from here downwards. We have that valley, and then we have a bit of a peak. Okay, so we do know we're hitting this volume range over here, this chunk of volume, and that chunk of volume lasts up until the next major chunk of volume, which is around 12,000. Okay, massive support. As you can see, however, on the smaller time frame, we are coming up, and I want to go ahead and zoom out a little bit again just so you can see how that extends across. We are coming out right now to retest. It's a little bit fidgety. Here it is over here. This chunk of volume right over here, and this chunk of volume is sitting just at or just under 16,700, extends up to about 17,000. So we are actually coming up on a historical trading volume resistance range over here. Obviously, these peaks indicate resistance. So that does actually go ahead and tell us again that this area that we are testing right now is actually a matter of fact historical resistance, and we can see that consolidation zone around at this price again to confirm that. So we are retesting resistance. If we fail, we will get hammered from that resistance, and we will be knocked downwards into this range over here. If we are able to push through it, we are going to be pushing up to that next little peak, which coincidentally, should I say by no coincidence, is sitting at 18,165, which we discussed already. Okay, guys, I'm going to go ahead and leave the video there. Like I said, I didn't have a lot of time, so I'll do it nice and quick. If you've got any questions, leave them down below. Let me know what you think. Do you think we're going to see a continuation upwards from here? Do you think we're going to go see a continuation downwards from here? Again, I'm going to be taking some shorts here because the risk return on a downward move here is more favorable, but I'll be definitely looking to take some longs if we are able to break above here. Anyway, guys, I'll see you guys tomorrow. Have a fantastic day. Cheers.